Good morning. This is Tom Alexander. It is Sunday, July 7th. It is about 9 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly update that I do each weekend. You can find this. Let me show the screen. You can find these reports here. Go to my website, alexandertrading.com, click on weekly update, and you can see, you can click on these going back, I don't know, a year or more at least. They include a PDF. You can download the charts that I'm showing that have the levels on them. You can go back and see what I said and see if this is a methodology that you may find helpful. If you find value in this video, please like and subscribe to the channel. That helps build the channel, which I'm trying to do, and would be very much appreciated. Okay, let's talk about the markets. Let's see here. I want to make sure I am showing what I want to be showing. Okay, you see the charts. Okay, so we have this continued bifurcated U.S. stock market where we have the various indices in various states of structure. Some are making new all-time highs, specifically the SPX, the NDX, the NASDAQ composite, and then some are lagging, such as the Dow, the Russell, the New York composite, the equal weighted S&P, the equal weighted NASDAQ composite, et cetera, et cetera. So everybody is up in arms over this because there seems to be this, the predominant assumption is that this is going to creating a divergence, and it's very bearish, and the market is going to crash or crater or something like that. And that's not necessarily the case at all. You can make a very bullish case based on where we are. There is no indication whatsoever of a top of any significance anywhere close to the SPX, the NDX. Now, that doesn't mean one won't occur sooner rather than later. And as a matter of fact, we've had, 3 or 4 consecutive strong updates in SPX and NDX. So a pause somewhere by Tuesday or Wednesday at the latest would certainly not be a big shock. Let's take a look at the charts. I want to show you a couple of things. Now, again, you can go to the website and you can see these charts on the website. You can also download a PDF, and it has this information in here. Now, this chart actually looks busier than it is. Basically, what I wanted to do is highlight the legs up, the primary legs up in the SPX, the NDX since this April low. And you had a little leg up here and then a very deep retracement. So I didn't count this, but you had a strong move up here with very little retracement. Then you had another strong up here with very little retracement. And if you take the distance of those two rallies and you extrapolate them from this low here, then in the SPX, that would project to 5780, 5800. Now, again, there's nothing magic about this. I'm not someone who, there's no resistance above present levels. Let's put it that way, because the SPX and NDX are in new all-time highs. I am not a believer in magic numbers, Fibonacci extensions, projections, and all that other stuff. This is the rhythm of the market since the April low. Now, is that rhythm going to continue? I don't know. But just for perspective, it would not be an outsized move relative to what we've seen since the April low for the SPX off of the most recent balance area retracement low to reach somewhere around 5,800. That's the only point that I'm trying to make here. Now, another thing to make note of is that the retracements since the April low have been very narrow. They've been in the neighborhood of a little bit more than 2%. So this is almost 2.75%, 2.24. This a retracement from here down to this level, this 54.46 level to the downside would be about 2.24. So that's in the ballpark of the two retracements that we've seen since the April low. That makes this a particularly important level, not only because of this, but primarily because it is the low extreme of this balance area, this consolidation that we saw last week. You had this level tested several times. It's a very similar picture in the NDX. They are moving pretty much in lockstep. I did, I took the same process here to develop a potential target if things are similar this time as the other two primary legs up in this rally off the April low in the NDX. Then we're looking somewhere around 21,300, 21,400 up here. And again, the retracements you can see. Now, let's look at some of the other indices. Now, the other indices are not in new all-time high ground, which gives us upper key reference areas. Let's look at the Dow. This could be potentially part of the bullish case. The Dow has been in this wide range balance area now really since June 20th, and it closed on Friday at the upper extreme of this balance area. If we close above 39,571, that could be very bullish, and it could portend a sharp ramp up to new all-time highs in the Dows. And while you may see some relative underperformance in the SPX and the NDX, if these other indices get going, they're not going to crater. So that would portend higher prices in those as well. And it could lead to that additional leg higher into those targets that I was talking about. Okay, let's look at the Russell. The Russell, as everyone knows, has been in a complete chop fest really since December. This is sort of a wide swinging giant balance area here. The range has narrowed, but the choppiness has persisted. A close above 2059 could be potentially quite bullish for the same reasons as I mentioned for the Dow. Now, the New York Composite, which is a very large, broad index of all NYSE listed stocks, has also been mired in a chop fest of a range. If it closes above 18,189, again, that could be very bullish for the overall market. So if we take a look at the internals here, something is going to give here. It seems like I say that every single week, but the breadth is basically flatline as the SPX and NDX have gone straight higher. Now, this sort of reflects, this is the Russell and the New York Composite in particular, the churning you see, where you see the churning, the internal churning. This is a 10-day moving average of NYSE advancing issues. By the way, the green is a 5-day moving average of advancing issues, and the histogram is breadth down here. So, guys, I hope you found this helpful. Again, if you did, please like and subscribe to the channel. Have a great trading week, and I will see you at a minimum next weekend.